Hello and good afternoon. You're watching Countdown right here on BloombergQuint Live. The markets are in a sore spot right now, with the index giving up closer to 150 odd points and the Bank Nifty more than 600 points lost in today's session. Coming straight to the headlines, then markets witnessed a sharp slide in the last 30 minutes of trade. The Nifty falls below the 11,350 mark. All sectoral indices now trade with losses. The Nifty PSU Bank is the top sectoral loser for the second day running. All constituents of the index are trading with losses. RBL Bank is now down over 20% in trade after witnessing a sharp correction. This is its biggest fall since listing. IndiaNivesh Housing Finance is down another 10% after a 35% fall in yesterday's session. Managing Director Gagan Banga tells BloombergQuint that the promoter shareholding post-merger with Lakshmi Vilas Bank will be below 10%. And auto sales continue to fall in the month of September. Bajaj Auto, Maruti and Ashok Leyland witnessed a 20 to 55% decline. Good afternoon, Neeraj. It doesn't seem to be a very great day of today either, and I think we're correcting pretty quickly now.
Yeah, Divina, this is exactly what we said in the morning trade setup and in the morning chat as well, that what if in the second half the concerns were to come in and bite some of the susceptible names, and that is exactly what's happened. Frankly, you can look at the charts all day. They will look very, very wobbly towards the second half of trade for the banks as well. 2.6% at a point of time, the Nifty had broken even, or almost actually gone up 0.4%. So from the highs, it's very steep, but 2.67%, 760 points for the Nifty Bank. What a clear shot it was this morning, really. The small bounce that it provided gave a short call for the Nifty Bank. And if you bring up the heat map, you will see what I'm talking about. It's essentially banks which are leading the charge. More so at the broader end of the spectrum, but even in the large cap space. Yes Bank is down another 22%. For once, our morning guest Amit Harchekar got everything correct. Kudos to him. IndusInd Bank down about 9.5%. SBI down about 6%. There is weakness in some of the other names as well. Z Entertainment, for example, down about 5.5%, and this one continues to bleed. You've got to keep in mind that Bharti is giving up some of the gains that it had yesterday. So there's a different pattern to what Bharti and Vodafone Idea and Reliance Industries are doing. They're merely giving up the gains, but the banks are the principal culprits, and one or two gainers out here, but the problem point is that the market right now is not distinguishing between banks which are relatively unscathed compared to the others, because Axis, ICICI, save for HDFC and maybe to an extent Kotak, almost everything else is getting painted with the same brush.
I think there's so much fear on the street right now. Everything's getting, exactly like you said, everything's getting painted with the same brush. So irrespective of the conversations of how solid a bank is in the past, whether it be an HDFC Bank or ICICI Bank, everything's going down in today's session. And the PSU Banking Index, which we've been talking about yesterday, I think was down about 3.5%, and today's session I think is down more than 5%, so almost 6% lower for the Nifty PSU Bank Index, and these are your culprits and the kind of losses that you've seen across the board. State Bank of India bleeding out about 6.5%. Punjab National Bank, Indian Bank, Bank of Baroda, everything is down and out, leading the index to crumble the way it has in today's session. Aside from that, in the broader market space, just want to quickly highlight a few other stocks, and then we get Agam on board to talk about the futures and options space. And we've already spoken about how the financials are looking extremely weak in today's trade. Yes Bank for one, RBL Bank is the other one that's witnessed a 17% drop, sharpest correction that you've seen in the stock since its listing. We'll try and get some more information as to what is causing this sort of panic exit in some of these names. IndiaNivesh Housing Finance and the rest of the group stocks as well have been in the red since morning. There have been some reports and new Bloomberg reports suggesting that since a year you had some probing that was going on by the registrar of companies in all of these three IndiaBulls names. So we'll watch out for that. Some green shoots being seen in some of those divestment candidates. BPCL, Concor and Shipping Corporation of India in today's session are just about holding their heads up high. Other stocks in news, NMDC saw a big relief run-up after there was some clarifications and some changes in terms in the minerals rules by the government from may to shall. So now there is no ambiguity on whether or not the Karnataka government will go ahead and renew their leasing agreement for the Donamalai mines. The stock's up about 7.5%. Chambal Fertilizers, Somany Ceramics, also on the back of those gas prices, natural gas prices being brought down by 12.5%. Those stocks are doing okay. Other stocks buzzing about on the back of heavy volumes. Tradebulls Ventures, lower circuit, Dish TV, almost 10% under, and that stock's at about 16 rupees now. And JK Paper is also having a tough day on the back of heavy volumes. They've been selling, and the stock is down about 8.5%. But what else is happening in the futures and options space? Agam Vakil is going to highlight that for us. Agam.
Oh, well, Devina, you and Neeraj have already highlighted it's suddenly taken a turn for the worse as far as markets go. And we are looking at, deeper cuts with, a surge in open interest for a lot of these, futures. The Nifty, which is down 1.5%, it's now, the Nifty is testing around 11,300 once again. That's seeing a 9% increase in OI. There is Nifty banking futures, and I mean, you can see this is another 23% increase in open interest. There was a little bit of a story playing out yesterday as well in the Nifty banking futures. We had nearly 38% increase in open interest, and there's been just as much today as well. So the weakness is evident, and the fact that we have seen such a decline. Today is the day when you see a sharp up move in the VIX. This is also telling you that there has been an increase in option premiums, currently at 17.5. Your open interest distribution, again, 11,500, and I reckon that must be the one where we must have seen a lot of activity. So let's go to change in open interest, and that should be up on your screen. Again, now we're seeing more and more activity around the lower level puts. 11,400 in this case stands out. Let's talk about a handful of stocks then. And we don't have too much in terms of gainers as far as stocks are concerned, but Yes Bank is down 20%. It's looking at shorts with an 18% increase in open interest. Moving on, we have Apollo Tires, which is down and out. It's down 7% as well for now. We have Union Bank of India from the banking space. Again, seeing shorts coming through. BPCL, perhaps one of those few counters which is managing to hold on, up 4% right now, 9% added towards longs. But today is a day which has been marked by a lot of weakness. We're going to have to wait and watch whether or not the last hour of trade brings some kind of recovery.
Okay. Right, all right, Agam. Thanks very much for that. So that's a quick wrap out of the F&O space, and it really the pace at which this drop has happened. I think we were just on the headlines when I read out Nifty Bank being down about closer to 650 points, and we were down closer to 788 points. Now we are back under 700 points. It's fluctuating very quickly. Let's also bring in a market voice then, Sorbh Gupta of Quantum Mutual Fund. He's joining us on the show. Sorbh, thanks very much for taking out the time. I want to talk to you specifically about the banks and how vulnerable is the structure of the bank Nifty at this current point in time, and also whether or not it makes sense to just stay away from the financial space right now.
Look, so what's happening is clearly the crisis of confidence among the capital providers to a bank, and it started with NBFCs, wherein the debt holders started to panic early about 6-7 months ago, and then the panic started to happen in the equity providers of NBFC. Now it's spreading to, after the event in one of the cooperative banks, now it is spreading to the private sector banks and some of the vulnerable names who have low capital adequacy. So that malaise is spreading, and in the banking sector there is always a domino effect, because each one of them is important for the system, and there could be a systemic risk. So I think market is trying to just guess who could be the next one to go out or go under, and that is resulting in panic in the marketplace for banking and financial services.
Would you reckon, Sorbh, that this is panic selling which will be bought into, or do you reckon that this shunning of these stocks might continue, or renewed buying will not come in, and therefore these levels on these corrective moves might stay for a while?
Look, what's happening is what is happening in banking and financial is reflecting what is happening in the broad macroeconomics. There are fresh rounds of NPLs that are happening, and the whole market participants are guessing that who will get hit the most and who is getting exposed to how many players in real estate and other things. So till the times the dust settles in the broader macroeconomics, I don't see a lot of investments coming at lower prices for at least the vulnerable names, because there is clearly not very visibility in the sense that who's exposed to what. So until unless we can really understand what's the adjusted book value of a bank would be in a year's time, because we really don't know how this NPL cycle will play out, it will take some time before things improve.
It makes you wonder with whether or not now with Q2 earnings, the watch list that we've been talking about for all of the banks, how does that change? How does that variable change? IndiaNivesh Bank in particular, there were a few accounts which the street was expecting that would have been brought under, the scanner and the provisions. They would have been taken under provisions, but they weren't. They were classified as regular accounts. That brought down the stock after its Q1 numbers, and now in Q2, whether or not they actually reclassify those accounts is something that's going to be an interesting watch. Yes Bank, again, that 10,000 crore watch list, does that change? Though the management has clearly said that we maintain that, and that really nothing slips out of the watch list, but there are clearly big concerns across the board for the banking space. Anyway, Sorbh, while we've been talking about the banking space, across the board and in general with regards to the market mood and sentiment, nothing seems to be too gung-ho at this point. What kind of changes, if at all, you would advise making to the portfolio in terms of weightages that you ascribe to individual sectors?
Look, so this is the time where you hunt for good, strong companies at great valuations, and this is the time you should keep your eyes open. So, auto is one of the sectors where we believe that there is a lot of good valuations, attractive valuations available, and we believe the slowdown that we are seeing is not structural in nature; it's cyclical in nature. Most of the subsectors within autos, like tractors or maybe four-wheelers or two-wheelers, we have a lot of penetrations to go about in India, and when things normalize and things improve, there will be a cyclical uptick, and we'll catch up to the structural growth trends in the sector, and the valuations are very, very attractive. So these are the names where you could do some cherry picking and pick up some good names, great names actually. You should be sure that the company will survive the down cycle. The balance sheets are good, and the company has a good competitive position in the marketplace. And if these filters, if the stock comes through these three or four filters and great valuations, one should go ahead and buy and start making a good portfolio for a long time, for a long-term basis.
Okay, so the other question is, how do you think this piece within, I'm stuck to banking somehow, because now the bank nifty is down 3%, 850 points, and this is after the fall that we saw yesterday as well. My question is, how do you think this pie unravels? Because at one end, if I take into account yesterday's prices, today may be an abnormal fall, but Bajaj Finance, extremely stretched valuations above 4,000, HDFC Bank 1250, Kotak Bank still holding fort. So some of the stronger names are still holding fort, and the weaker names have got completely whacked out of shape. Would there be some mean reversion which a lot of people have been now crying for the last 1 year and not gotten? Or do you think the expensive will continue to stay expensive for the foreseeable future and buying will just not come? If you were to put in money, would you think of doing any kind of bottom fishing in any of the financial names? I don't want to have the names because you can't talk stocks, but would you do that?
Yes, and you talked about the bipolar nature of the market that has been over the last 1 year. It's not specific to financial services. We are seeing this across sectors, and we believe that mean reversion should happen. We will try to do, definitely we are looking at bottom fishing, and we are a great believer on valuations, so we don't forego valuations that easily. We believe valuations are of paramount importance, as important as the business strength. So we will stick to valuations, and we'll stick to buy companies, good companies at great valuations, and if something comes, then we'll definitely buy. We'll stay away from expensive names, because we believe that however good the business model, a great company can be a bad stock at a very bad price, at a very high valuations. We'll stay away from that. We'll stick to our nature, that we'll try to buy companies at a good discount to fair value, wait it out, and we believe that these type of cycles come in the market where things become very unusual and there is no mean reversions and there is no respect for valuations in either case, whether on the upside or the downside. And this is the time we need to stick upon our research and our valuation parameters that we use, and go ahead and buy those names and wait it out.
Okay, just look at Z now. Z is also lost 15% at last count that I can take a note of, and it's just fallen off the cliff. This really doesn't do anything much for mutual funds that have agreed to extend the deadline to the SL promoters to have the payback again. Remember, obviously, while the management has said that they're trying to find the best possible value for their assets and they don't want to conduct distressed sales on their asset, and any further stake sale in Z will happen at a price of 400. But just look at it; it's half from 400. So even what do you do in such a situation?
Yeah, it's just, this is perplexing because they do have an asset, by the way, which is doing very well. It recently topped the charts as well, I believe, of the ratings. But the point is, right now, from a financial markets perspective, there's just no takers. Devina is right. I mean, I'm just stuck to financials, but look at the Nifty.
It's 21% lower now.
Yeah, Z is 21% lower. The Nifty is 2% lower, falling and cracking thick and fast. And there's just a lot of pain out there within all of these names as well. Sorbh, do you think the buying interest into any of the quality assets which have some other issues is going to hurt these names? We're seeing that play out in Z right now. We've seen that play out in some of the others as well. Do you think that is going to continue, or is this the sign of the final bout of capitulation? Because stocks typically fall so much in the final leg of capitulation in a normal market. This just seems to be a slightly abnormal month of September and the first day of October.
Yeah, so one should understand that there is no asset beyond its management. So what management has done within the company and outside the company is very, very important. Even if so as you say that he is the safeguarder of the moat. So however good the business is, if the management is got into something and his management bandwidth is getting used somewhere else, the business or the asset is bound to suffer. So we believe that we should not get into companies where maybe the asset is great but the management is not that great and wait out for it to sell, because these transactions might take long. And as you are seeing, as you are rightly putting out, that the stock price volatility can really throw you out of the market despite waiting it out, buying into a good asset. But then we believe it's not a great idea to get into only because of the asset is of great quality, and somewhere down the line there will be a merger or an acquisition and that can bail you out. We believe that is not a great strategy. You need to bet on the business as well as the management, and on a continuous basis, that the current management will continue and then how the business should look. So we believe it's not a great idea to look into only the asset and not the management, and believe that some point in time the management will change. That's not a great idea. If you want to get into such kind of names, let the transaction happen and then the management change, and then have a relook at the business, and then you get into the stock. Even if it's a little higher, then that's okay.
Right. Remember, just a few days ago, on 2 occasions, you had, exits and revoking of pledge shares for Z that was sold out, and probably today's session could. At the end of the day, we'll get a clearer picture as to whether or not some more of those pledges have come back into the system or no, have been revoked or no. The stock's at about 223 odd. But while Z deserves the attention, there's another group of stocks which also deserve attention for the kind of ferocious sell-off that they've seen over the last 2 trading sessions. The Ministry of Corporate Affairs is likely to submit its final report on probes conducted on 3 Indiabulls group companies by the end of October. The ministry had been looking into these group companies for over a year now for alleged financial irregularities. Shruti Srivastava from Bloomberg News, she's joining us right now to tell us more about the probe. Shruti, take us through all the details and the companies involved in the same.
Yeah, so the Ministry of Corporate Affairs has been probing 3 Indiabulls companies for the last year now, for the last 1 year or so now, on to look into the allegations of potential wrongdoings in these companies. Now, the probe was started last year after the ministry received complaints against these companies from several stakeholders. And when the ministry looked into the complaints, it found out that a lot of subsidiaries were registered at same addresses. There were a lot of cross holdings among related parties, and there were deep linkages. Now this raised the suspicion of shell companies and abusive related party transaction. Now it's precisely these allegations and the allegations of financial irregularities and mismanagement, that is what the ministry is probing right now. We are told that the report on this will be submitted by the end of this month.
Well, it's certainly spooking some of these names, Shruti. Thank you so much for joining us with that piece of news. That's a Bloomberg exclusive, of course. And remember, we spoke to Gagan early in the morning too.
Yeah, a lot of subsidiaries, interrelated party transactions. I mean, that angle is also a very touchy aspect with regards to the market mood and investor sentiment, because people just switch off like this.
Yeah, and also more important, because this is now apparently, if this probe is on for a year now, and it's not just a short time frame. So it's all started somehow the last 2 days with this, and it's gone on and impacted a bunch of other financial names as well. IndiaNivesh Bank, RBL Bank, you name the stock, and that stock in the banking space is down. Sort of the other bit is the market right now is not distinguishing between what is, at least until 15 days ago, high quality financials being beaten down versus almost any sort of names. And I would use 3 names out here as examples because they are getting decimated every single day. SBI is certainly getting decimated. I wouldn't use the same term for Axis and ICICI Bank, but 2 days on a trot, those two have come off. These names, which might have some exposures to, these groups which are right now in focus, is the price damage already baking in the worst, or do you think it's difficult to say that right now because we've now been calling this bottom of the NPA and watch list for months now and still not happening?
Yes, very rightly put, in the sense that this whole NPL cycle has again restarted with the economy worsening. Look at
Sorry, I have to come in out here because we've got Mr. Rajiv Ahuja of RBL Bank. You might want to listen into this conversation as well. He joins us right now because the stock has witnessed its biggest fall post its listing. Mr. Ahuja, thanks so much for joining in. I'm sure you've been asked this question by a number of your investors already. What is it that is spooking the stock?
Neeraj, frankly, I have no reason why. I mean, we are still chugging along well. We're still growing. We will be profitable. We've already shared with the market what the problem is likely to happen, and that problem is playing out this quarter, next quarter. We have adequate capital. And so, some of these movements in the stock price, to us appear untoward or misplaced. And frankly, we don't see any reason. We are a healthy bank. We are growing. We are profitable, and we have adequate capital. I think we've been very upfront with the market, with the investors when we saw some problems emerge. And I think we will come and update the market in 2-3 weeks' time. But I don't think anything major has changed since the time we spoke last. So some of this, volatility is something which, frankly, I don't think we can put a handle on. And I can only assume that some of this is misplaced or motivated.
Well, Mr. Ahuja, I think one mention that happens when we speak to a lot of market participants and try and talk to dealing rooms about what could be the factor is the probable exposure that all banks, and you and some of the others as well, would have to real estate and financial names which are right now a lot more susceptible. So there's a bit of a collateral damage that is coming in, and people believe that the impact of this is unknown. Now, when the last quarter numbers had come out, things were okay, but you had spoken about there being some exposures which could turn wobbly in the quarters to come. Maybe the market is worried about that. Would you care to clarify to the suspect real estate names, to the Indiabulls group, etc., etc.? Are there any exposures which have, in the period from the last quarter to this quarter, turned a bit adverse?
So I can obviously, I'll just reiterate what we even said on July 19th. We don't see any challenges. We don't have any sectoral issues in our portfolio, even then and even now. We had very specific issues around a few companies which are unrelated to any specific sector you might have brought up. And we actually made that pertinent point in our commentary too. That position is still the same. So there is nothing which is very specific. I know there's been a lot of conversations in the last 2-3 days around some real estate, some financial services oriented group. Our exposure actually is very, very tiny, and it's all secured. There's no problem in debt servicing, and we all also have a lot of cash lying with us. So I don't think there's anything which has changed on either financial services or real estate vis-a-vis us between the time we spoke last on July 19th and today. And in 2-3 weeks' time, we will actually have full clarity on our results. And you'll find that actually we have continued our progress on building the franchise, building the base. So there should not be any difference from what we shared on the 19th call.
Right. Mr. Ahuja, just also, if you could put to rest or care to clarify on some reports suggesting the possibility of a fraud investigation into RBL Bank.
Ma'am, this is something totally out of place. I mean, I think this is where we need to be very careful. I mean, a lot of this is malicious, and frankly, I don't know. We have had nothing of the whatsoever. And somebody brought it to our attention an hour or so ago, and it's totally out of place. Nothing of this. We run a fairly high level of governance. We have full disclosure. I don't see any reason for this rumor to be out there, and I can state with you that it's not the case.
So there's been no conversation with the Serious Fraud Investigation Office at all?
Not at all.
Okay. All right. So you've spoken about having enough and more cash on the books, and in terms of exposure to some of these stressed accounts have been minimal, and sectoral weightages also that you have are not too high towards these stressed areas. So over the past few months, have you seen any big accounts of yours that could likely slip into the non-performing asset?
So outside of what we shared on 19th July. I don't think the situation has changed at all. So, we are watching the situation on a very proactive basis, given what's happening in the macro situation. But I don't think there is anything materially different from what we shared on 19th of July.
No, Mr. Ahuja, just one last question from my end, really. I think the reason why, again, and your clarification out here always important, because it is that stock that is getting hammered, is a bit of a repeat question that on the 19th of July, what was shared was that there might be some exposure to select accounts which could turn adverse. I think the rumors are around a lot of names that keep on propping up, and the exposures that banks like you would have to the Indiabulls group, to some of the large real estate entities. Are there any issues with any of those accounts, sir?
May I repeat? I think outside of those, what we shared, and in the normal course of business, there's nothing materially different from where we see it today.
Okay. Great. Mr. Ahuja, wish you all the best. Thank you so much for taking the time out and giving us this clarity.
Thank you so much. Bye-bye.
That's the MD and CEO of RBL Bank, Mr. Rajiv Ahuja, well, talking about this. There's been a sharp correction in that stock. There's been a sharp correction in a bunch of other stocks. I think the clarifications of the managements are important. Somehow, for now, they aren't quite helping, really. Sorbh Gupta has been with us. Sorbh, my one last question. You've heard the interaction with RBL Bank as well, and you would have probably heard the clarifications of IndiaNivesh Bank or read about them as well yesterday. There is a reason why the market doesn't seem to be wanting to completely believe, or even if they believe, don't want to take any kind of a large exposure to these names at these valuations.
Yeah, so what clearly is happening is that the market just does not want to trust, and the market's mood is that just avoid any kind of risk that can happen. So the 2 or 3 the best quality names in the sector, they are not getting impacted. Rest all are getting impacted because the market is in the mood of guessing and just punishing without just looking at the facts right now. So there is a bit of irrationality that is getting built on, and we believe as the quarterly numbers come and the numbers are better than what market is anticipating, if they are better, then things should normalize. So clarifications, each of these managements are coming out and clarifying, but again the market seems does not in the mood to believe right now.
Okay, so we'll leave it at that. Thanks so much for taking the time out. Dhananjay Sinha of IDFC Securities with us on the phone line as well. Dhananjay, what are you making of this meltdown that we're seeing in the financials in particular?
So I think there has been there was a fairly aggressive rally after the recent announcements of tax cuts. So I think there is certain normalization that is happening, and I think people are now getting focused on the upcoming result season. And I think what people are sort of concerned about specifically with respect to the banking space is that there is a possibility of rise in NPAs again in this particular result, especially in the context that your credit growth has actually come off to something like 10% from a high of 15-16% about a year back. So I think that concern is actually reflected in the financial services space and banking space in particular. And I think this external benchmarking, especially with respect to the repo rate, is also sort of having concerns relating to the spreads. So these are the things that are actually bothering the market at this juncture. And some of the recent disruptions within the banking sectors, especially with respect to the cooperative banks and few other banks, I think those are also playing out in the market sentiment. So people are sort of selling banking stocks, and possibly they are sort of looking at IT space where to hide. So that is how the market is actually positioned at this juncture.
All right. Dhananjay, would you expect that by the time we see Q2 numbers coming about, the financials which up until now, were touted to show a dramatic improvement could actually show something which is quite adverse in terms of at least asset quality and more accounts getting into slippages?
Yes, that's quite a possibility. See, so you have various accounts which are being sort of looked at in terms of how analysts are considering, renewed high rise in the NPAs. So that's quite a possibility, and there is a lot of talks that is going around there. But apart from that, there are smaller names and there are multiple names where concerns are rising. So clearly, what we have seen from a historical standpoint, that if the credit growth falls by 100 basis points, GNPA growth rises by 300 basis points. So there is a elasticity of almost like 2.5-3 times. So it is quite clear that the NPAs will rise, and you also had a sort of a deflationary environment there because of the falling commodity prices and the spillover from the global trade standpoint. All those make a case for a weakening repayment situation for the corporate banking and especially the corporate banking space and in general the debt payment service capability of the economy.
Dhananjay, let me also drill it down to PSU banks then. Last 2 days have been pretty bad for them. Today's session has seen the PSU banking index dip by about 6%. Is it a no-go in that particular zone?
So I have been particularly underweight on PSU banks, so notwithstanding the recent rallies that we saw a few months back. We were first to come up and say that we need to go underweight in banking space, and we pulled down the weight for SBI when it was at 340 or 350 levels. So it came down to 270, rose after that, after the announcement of tax cuts to 280 or thereabout, and it's coming back again. So with respect to the PSU banks in general, what people are concerned about is a renewed sort of regime of directed lending, wherein certain statements made by the government that should be loan mailers, etc. Clearly, while the government is actually infused capital, it does look like there is also a sort of a directive for them to do directed lending. So that's not taken very constructively by the market. And also, I would say that while government has actually been pushing PSU banks to do lending, especially in the retail sector, also various priority sector, etc., people are not sure whether these will translate into higher profitability. So you have a concern on this benchmarking, which is generally considered to be adverse from a margin standpoint. Also, the incremental allocation of loans will also is also seen as a drag for future outlook. And third thing is that your GSEC yields have actually hardened, So from 630, GSEC yields have gone up to something like 670, 75, 10-year if I am looking at. So the hardening of the GSEC curve would also translate into a reversal of trading profits as PSU banks would have made in the first quarter. So I think going forward also that is a concern. And if 10-year, if they harden furthermore because of fiscal slippage and all those kind of stuff, so those things will also be will have a bearing on the PSU bank stocks.
Right. One last question, Dhananjay, before we let you go, is with regards to whether or not now real estate becomes the epicenter of all the issues that we're seeing with regards to NBFCs having exposure to them, and also with regards to developers themselves. So how does one ride through the wave out here?
So I have been a seller in NB housing finance companies since 2017, since October of 2017. So I've not really changed the view. Things have actually evolved much worse than I had thought over the last 1.5 years. And I guess the resolution would be important to see. And broadly, what I expect is that mortgage lending NBFCs will cede market share to the banking sector in general. So mortgage lending will largely transmit into the banking space as a whole. So I'm not really considering housing finance companies per se as a something to be in. So we were ahead of the curve in terms of taking that call. NBFC is relating to consumer lending, etc., might actually continue to do business well. So I think with the thrust on retail lending that the government wants to sort of do, I think there might still be a better place to be in versus mortgage lending NBFCs.
All right, Dhananjay, we'll let you go on that note. Thank you very much for joining us. Dhananjay Sinha there of IDFC Securities with his views on the market. Bringing in our technical expert, Sacchitanand, Uttekar of Tradebulls. He's joining us on the show right now, along with him. Amar Singh is also going to be here in a few moments. Sacchitanand, let's keep it with you first. On the index, on the Nifty as well as the Nifty Bank, what would you do?
Well, good afternoon. Well, it has been a volatile day, and if you look at the entire structure, the structure is still on the bullish side. But if you look at today's session, we were not really expecting a drop below 11,400. But the way it has escalated and the way it has again rebounded from its 200-day exponential moving average, probably there could be a possible exhaustion of this ongoing decline. So we are hopeful that in a day or so market should stabilize somewhere close to this particular level of around 11,250. So the bias clearly stays on the long side. We are hopeful that market should stabilize and probably we may see again the up move getting resumed. So technically, the stop loss for the trade should be placed somewhere close to 11,170 on a closing basis, and probably some more decline towards 11,250 should be utilized to create some long positions. On the higher side, we are not expecting an immediate movement above 11,600.
Okay, so in light of that view, what's the call on specific stocks today, Sacchitanand?
If you look at the overall data, I think there are two ideas which are still trending. And if you look at the setup of TVS Motors, in line with the auto numbers, looks very interesting. In fact, 400 the put option activity has been very strong. And if you look at the entire fall in today's session, we again saw a rebound from the same level of around 400. So on a conditional basis, I would like to deploy a long call, long strategy here. TVS Motors should be bought once the stock starts trading above 408, 409 levels. The stop loss for the trade should be placed at 402, and we're expecting a major thrust getting occurred once this level of around 410 is breached, and we're expecting that the move should take the stock towards 430. So on the long side, a conditional buy on TVS Motors with a stop loss of 402 and a target of 430. And on the short side, metals are still on the weakening side. And if you look at the overall setup of JSW Steel, we are still seeing that the stock could escalate towards 210, 205 kind of levels. So any pullbacks in this particular counter should be utilized to create short positions. 227 should be the stop loss on the trade on a closing basis, and we're expecting a swing back to around 210. So a long short combo can be deployed at this point of time.
Okay, so those are some strategies from Sacchitanand. We'll get an Amar Singh in a moment from now. Dharmesh Kant of IndiaNivesh with us on the show as well. Dharmesh, good having you. Thanks for joining in. What would your call be, Dharmesh, on 2 or 3 of these banking names which have gone down today? RBL Bank, Yes Bank, and an IndusInd Bank. What do you do here?
Yeah, good afternoon, Neeraj. See, I don't know what the rumors are doing the rounds, but what I understand as far as Yes Bank is concerned, there was some technical glitch in the system, and because of that, few accounts were unable to withdraw, do a transaction, and that is the reason why this kind of a crash was seen in the counters. And RBL Bank, I think management came on some media channel and they have clarified the stand, so the stock is recovered post that. But the fact remains that they have exposure to certain accounts, and they are not coming up clean. Every time, every couple of months there is some account or the other comes up and the credit cost goes up, and then the NPA kind of a thing starts looming over them again. So unless the clear clarity on the asset quality which is there, and what is the impending problem in the assets which may emerge, if they don't come clean, this type of things will keep on happening. So I mean, at $30, Yes Bank is almost like zero kind of a valuation which they have reached, and now this India's housing finance thing is doing the round. But I would sincerely suggest to avoid these counters, not to jump, not to have any exposure in any of these banks. Even IndusInd Bank, maybe because of interbank deposits and interbank transactions happening, it may fall into a trap because of trouble by others which are there in the system. So a lot more pain to go. If you remember, a couple of months back we spoke about the same banks, and we said that, I said that asset quality still remains very murkier, and things are coming out the same way, so avoid them.
Right. Gentlemen, just stay on. In fact, interestingly, on this very same topic with regards to how exposure to real estate could be credit negative for some of the banks, and the increasing liquidity stress amongst real estate players, and the impact on Indian banks that have exposure to it. Let's listen into that conversation that we had with Moody's Alka. Anbarasu Shefali from our research team conducted the interview with her. Listen in.
We do see that commercial real estate or direct and indirect exposure of banks to real estate sector is meaningful, at least for some of our rated banks. So if the situation in the real estate developer segment continues to remain sluggish, i.e. the liquidity conditions translate into solvency concerns for some of those developers, we would see asset quality pressures for some of our rated institutions.
Ma'am, in the report you've spoken about Altico, DHFL, but in last just 2 weeks or so, we've seen a PMC bank issue erupt in India. That's a cooperative bank, of course. And then there is also, yesterday, or rather last week, Lakshmi Vilas Bank was put out under the PCA framework, which obviously has an impact on the Indiabulls group, because they've been trying for a banking license via merger route. With all this happening, do you think that there is a contagion risk out there, especially for the banks and the non-banks focused on developer lending?
Yes, indeed. So what started as liquidity issues in the sector, primarily for the NBFCs and HFCs after the default of INFS, we think that situation has now transpired into solvency or credit concerns for some of those companies. So names that you highlighted, they were facing tight liquidity, but now the situation has worsened into even solvency concerns. So indeed, there is a broader sector-wide implication if the real estate sector continues to underperform, and the fact that the developers are unable to meet their obligations, because the first order impact is obviously the direct exposure of the credit providers, but the second order impact could be even on the mortgage exposures of banks and non-banks to end borrowers who have bought projects stuck with developers who are unable to complete those projects.
Okay, ma'am, let's try and segregate between banks and NBFC. Where does the biggest risk lie? Some of the NBFCs, of course, have direct exposure, but even some of the banks like Yes Bank, IndiaNivesh Bank, they have considerable exposure directly or indirectly, even some of the PSU banks as well, to this particular space. So what is your thought process on the same?
So within the two segments of the financial service providers, when it comes to NBFCs or HFCs, we think the issues are confined to certain companies who have concentrated exposures to developers. When it comes to the banks, some banks have larger exposure to commercial real estate sector. But at the same time, I think for the overall sector-wide, we need to understand that not all of the commercial real estate is just developer financing. Some of the commercial real estate is also lease rent discounting, and some of those could also be the projects that are performing fine. So the issue are confined to projects that are where developers are unable to complete them, and these issues are quite widespread, i.e. they are not really concentrated in one or the other lender. Impact will need to depend on which developer faces those liquidity conditions.
Okay, ma'am, with all that is happening, some people are calling it India's Lehman moment. Would you also term it like that?
I'm not sure if it is of that order of India's Lehman moment. Perhaps the concerns, we think that at least the concern in the shadow banking sector, which is NBFCs and HFCs, have confined to a few names. We think many of those companies are now able to access funding from the markets. So in that regard, we think the issues are confined to a few names. And when it comes to even the developers, real estate developers, perhaps the issues are concentrated for a few names who will face more credit concerns and asset quality issues. But at the same time, we don't think it's an entire banking system-wide issue at the moment.
Okay, one last question. To fix the problems right now, what according to you should be done? Government recently announced that it would create an investment fund to provide soft loans to residential real estate developers, but that's not enough, of course, to fix the entire sector. So what more according to you can be done to provide a boost?
So indeed, I think at this we are not in a position to give any policy guidance or suggestions. Having said that, I think what we can look at is our banks that we rate. And in this context where credit concerns are rising again, we think banks that are more prudently run and build up loan loss buffers against unexpected risks will probably see better outcomes. On the other hand, the banks that have overexposed themselves can see further deterioration in their credit profiles.
Well, that's banks, and wonder what will happen with them. Well, but there is a bunch of companies on the other side which are not doing all that poorly as well, though banks continue to slide lower, financials continue to slide lower, and today some of the telecom names have also slid. So Vodafone Idea, for example, is down about 13 or 14%. Just goes to show betting on these numbers becomes a very, very risky idea. Dharmesh, the other set of stocks which have corrected thick and fast today are Z and Dish TV. Now, what happens here? What should an investor do? Because yes, these assets might be great money generating assets and the business might be good. The stock price is clearly getting spooked for a lot of other factors.
Yeah. See, as far as Z Entertainment is concerned, investors should stay put. They should keep on holding it. I think it's a matter of time that entire issue with the promoter pledging the shares and getting out of repaying the debt is resolved. Business per se, there is no problem on that front. Dish TV, there was no business at all. Right from the beginning, I never saw that as a good, promising business model. And now it's already on its way out. So Dish TV one has to exit. Z Limited one can still hold, but it may take its own sweet time, and you can have a slide of 10-15% more on the stock price. So one has to be prepared with that. But the idea is to stay put there.
All right. Stay on, gentlemen. Lots more to talk to you about, and these are some of the beaten down names. But one stock that's managed to buck the trend in trade today is NMDC. The straight-run miner is gaining after the Ministry of Mines amended a word in its rules. Nikki Mirjandani is here to tell us what has changed and its implications. Nikki.
Here the words have changed, and the notification in itself has amended the ministry's rule out there, which says that Mine Ministry notification amends the word may and put shall in one of the rules. Now the rule was MMRDA rule number 3 and a sub rule 2, which suggested that the state government may renew the lease, which happened. Karnataka government interpreted this word may and decided not to extend mining lease of Donimalai to NMDC. Now with this latest notification, the Karnataka government will have no other option but to go ahead and renew the lease for Donimalai and for NMDC as a whole. This comes as a great positive for NMDC, given that Donimalai mine contributes to around 70% of the overall output that we saw in 2018-19. And besides that, it also gives us a hope of future mining renewal coming in for Chhattisgarh, where most of the mines are due for renewal in March 2020 to 22 period. So this favorable development can also lead to an upgrade, a rating upgrade for the counter, given that slew of brokerages like that of Citi in the recent part went ahead and downgraded the counter, saying that these kind of uncertainty relating to the approvals were a major overhang. They have put in actually a number to the current market price, where they say that lack of Donimalai would dent the current target price to an extent of ₹20 per share. And just in case if this scenario is reversed, then the benefit would be to an extent of 20 per share. On the brokerage note, MK Securities suggested that this notification overall is a great positive, and even as central government and the state government continue to negotiate on the renewal of the mining lease, but then this action clearly sends out the message that the renewal of any government company's mine in the future will not be in any kind of problem by any of the action of state government. Overall, if you look at the Bloomberg consensus rating, 9 out of 19 analysts have a buy rating and suggest a potential upside of nearly 20% for this counter.
Right, Nikki, thanks very much for that. So that's NMDC, which is in focus. Now the ambiguity on the Donimalai mines and the lease agreement there with the Karnataka government is put to rest. So that probably has led to the fillip in the stock. It's up about 8% and good volumes as well. Closer to 20 million shares have already been traded. Amar Singh of Angel Broking is joining us on the show this afternoon. Amar, thanks very much for taking out the time. Starting off first, actually, before we actually get into your nifty calls, let's talk about individual stocks. What are you recommending this afternoon?
I would say that given the trend of the market, the market has corrected, and we are seeing some pullback right now, but that could also be short covering. So I have two sell calls. One is in Tata Motors. What we are seeing in Tata Motors is that it did consolidate and managed to rise towards 135 odd levels, but then it has been giving away its gains slowly, and it's almost retracing its lows which it had made recently. So any pullback in Tata Motors can be used as a shorting opportunity. So October futures around 118, 119 levels can be a good opportunity to short, with a stop loss of 123 and a target of 109 on the short side. As far as the other stock is concerned, that's from the pharma space, and that is Aurobindo Pharma. What we are seeing here is that technically, if you look at it, the long-term charts clearly show that upside will meet with selling pressure, and also there would be profit booking the moment the stock rallies. And what we've seen for the last few trading sessions is that the stock has been correcting and unable to sustain above the 620 mark, because that was a level of resistance. So this is one stock one can look at. So any pullback towards 581, 585 levels in the October futures can be used as a shorting opportunity, with a stop loss of 598 and a target of 553 in the short term.
Dharmesh, do you track NMDC? What's the take now? Is it more positive post this clarification and this change that has been put out?
Yeah, definitely. I mean, now there is a clear visibility that May and Shell has done the trick for NMDC. So there would be continuity of, supply to it, and they would be mining and extracting it and selling it. So earnings visibility is there, and if, prices pick up on, global recovery, So it can be around 140, 145 is what the target price we are expecting for NBC based on FY21 numbers. So that also includes the steel plant getting commissioned. So we have built in that SOTP based kind of a valuation model for that. But this was definitely, I mean, it came in between from nowhere that the renewals may not be there. So it is out of the window now. And I think it's a big positive for NMDC, and so the monopoly on the iron ore mining continues in our country, and it goes to benefit from that. So it's a clear buy.
Okay. Dharmesh, just one final question. The spate of news flows that had come in today, there was the divestment move announced, and stocks like BPCL are still trading firm despite the markets looking wobbly. It's trading up about 5.5%. Would you be a buyer in BPCL?
Yeah, just for the sake of this news flow, because the government has no choice but to go for the divestment, and BPCL sits on a large part of land assets. So the thing which has to be seen out there, whether they will be selling only the refining business or it's a en bloc sale when the assets also goes along with that. If the assets also goes along with that, then the valuation can be quite high. I mean, SOTP based valuation, it can be anywhere between 750 to 800 kind of a price which the BPCL can, ask for. But if that is not the scenario, then I think 650, 660 should be the, asking price for BPCL divestment. So, yeah, definitely as a trade, this buy is definitely on.
Okay, Dharmesh, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective.
Thank you so much.
Well, just before we get back to Sacchitanand, Uttekar, as well as Amar Singh, we're talking about news flows that have happened. The government has announced a cut in natural gas prices. This was the first cut in prices after 4 hikes that begin in October last year. A cut like this should be quite positive for ceramic companies, especially because the cut is slightly larger than what was anticipated. To talk about what's possible impact of this move, Mr. Abhishek Somany, the managing director of the company, joins us right now on the phone line. Mr. Somany, thanks so much for joining in. Can you help us understand how big a positive would this cut in gas prices be for the sector?
I think there's a misunderstanding because this particular gas price is for the domestic gas and also it's for the piped gas for the city gas. This does not affect anything with the ceramic industry because we are linked on a 3-year average crude basket. So we are in fact linked to the crude oil prices. This does not affect us in any which ways.
Okay, interesting. One of your peers was suggesting that maybe some benefits, but maybe be that as it may, how is business right now looking? Because we have almost at the end, or we have actually finished the September quarter as well. Without getting into specifics, because you might be in a silent period, how has business been in the quarter gone by?
Right, so just to clarify what you just said, what the payers have said, so they may be referring to the crude basket going down. So if you realize that in the last quarter versus the previous quarter, the crude average has been in the 60-65 range. So with that effect, yes, the natural gas prices for us would start tapering down October, November, December. And if this trend continues, it would remain the same for the following quarter. So to that extent, yes, they are right that there will be a slight reduction in the natural gas prices, but that's nothing to do with today's news of 12.5% cut.
Got it.
So that's the clarification. And it will be a significant cut for us. About 7-8% cut should be there in our both the Kadi and the Kasar, the Haryana plants.
Okay. What about the business though, Mr. Somany?
As far as the business is concerned, it has been a tough quarter. July seemed to be a decent month, but then August fell across the curve with all building material, and that was more related to the rains, the inundated rains, which has hit India, pretty much every state in India. So due to that, we also have been affected to that extent, in the sense the industry. So August and September, now things have started looking up, and with the festive season coming, government announcing excellent impetuses, I think we should be looking at better times after Diwali.
Okay, Mr. Somany, we'll leave it at that. Thanks so much for taking the time out and being with us. That's Somany Ceramics. The average crude basket fall correction certainly helping these companies, up about 3.5%. for Somany Ceramics in the session today. There are a few stocks which have done well. By the way, the markets too has recovered a bit. So about 1% higher for the, just about 1% lower for the Sensex, and the Nifty Bank about 1.5%. So nowhere as bad as it was when the show started, and nowhere as volatile as well. We haven't quite taken the Nifty call from Amar. So one Nifty call from Amar and one question on BPCL to Sacchitanand. But first, Amar, to you, since the Nifty's recovered a bit of lost ground, if you were short, would you cover your short positions or would you stay short?
I would say I definitely want to cover, because what we are seeing is that if you look at the 20th September high of the closing of Nifty, that was at 11,274, and today's low was below that. So that's a very crucial support zone. So anywhere between 11,200, 250, that's 300. This is a very strong support zone, and so this was expected that there could be some short covering. However, what we are seeing is that Nifty is unable to consistently sustain above the 11,500, 550, 600 mark. So it's more of a range play, but I would say that the bias still remains positive till the time we don't see a closure below 11,200 levels.
Okay. Sacchitanand, a quick take on BPCL?
Well, the trend has been really strong, and it has been a very significant rally when it comes to BPCL. But if you look at, the recent movement that we have seen, it has moved far away from its averages. So basically, what it indicates is that, it has witnessed a very abnormal activity, and probably, if someone is holding on to a long position, I would recommend them to, really book their profits and stay away from the counter for a couple of days until the movement neutralizes. So probably, in case if someone wants to play on and ride on this particular move, then the ideal stop loss in this kind of a scenario is around 480, which is also too far. So, it's better to book profits and sit on the sidelines when it comes to BPCL now.
All right. We'll let you go on that note, Sacchitanand. Thank you very much for joining us. Appreciate it. Sacchitanand Uttekar there with his trading calls, as well as a few stocks like BPCL, where he has a positive outlook. But let's also find out what has made it to Sharad Dubey's list of Fab 4 stocks this afternoon. Sharad.
Good afternoon, Devina. The first stock is Container Corporation, which the stock rose as high as 6% today, touching its lifetime highs. This is based on the news reported by Bloomberg that the government is weighing plans to sell its stake in PSUs. The divestment plan will happen by the end of this FY20. Up next, we are having Adani Gas, which is up almost 1% after Oil Ministry announced price cuts for the natural gas prices. The price has been cut to $3.23 per metric million British thermal units as compared to $3.69. Up next, we are having Escorts, which is up almost 5% after it reported a good set of September sales number, in which the sales grew almost 2.2%, at 10,855 units versus 10,617 units last year. And the last stock of the day we are having is General Insurance Corporation, which is up almost 3%, and with high volumes trading at almost 3 times its 20-day average. So these 4 stocks are buzzing in the space today.
All right, Sharad, thank you very much for that. A few stocks which are not doing too well. A Vodafone Idea, remember, while yesterday's session was not bad, you saw telecom stocks doing well. Today's session has seen a dropping of about 14%. RBL Bank, there has been a recovery, and I think that's been the case with the rest of the banks as well. So probably not relatively stock-specific move, but the entire pocket-specific move that's happening. So now back closer to 300 for RBL Bank, from being down 20%, it's now down about 8%. Karur Vysya Bank's down 8%. Dish TV, that doesn't budge. That was down about 10% at the start of the show. It's still down 10%. DLF is down 7.5% as well. And I just want to take a quick look at what the PSU Nifty Bank Index has done. We started off the show with the Nifty PSU Bank Index being down about 6%. There has been a recovery. I think it's recouped at least half of those losses. So now down about 3.5%. A quick look at how the turnover numbers are panning out. And this is going to be an interesting one to see. 39,000 odd crores. Again, you'll be crossing, you'll be nudging 45,000 odd in terms of the cash market turnover. Heavy numbers since the last 7 to 8 trading sessions. The average has shifted now. So the original previous average of about 32,000 that has been challenged pretty decisively. And now I think you're looking at a number closer to 38, 39,000, which has become the average over the last trading sessions. If you were to consider even Friday's 87,000 crores in the cash market side. But on the futures and options side also, this is a very large number. If you go to see, remember, it is a truncated week. you're probably going to see, Wednesday is an off, and the weekly options expiry happens on Thursday. So much of tomorrow's activity gets pushed onto today. So that number looks more inflated as well. So 17 lakh crores in terms of the NSE F&O turnover. A few stocks that, Amar, if you could come in on, and whether or not it makes sense to trade them at all. One would be a Dish TV. At this point, I think it's about 16 odd rupees, 16 and a half. Would you trade this stock at all? And the other, if you haven't spoken about it already, RBL Bank at about 301.
Yeah, talking first about Dish TV, what we are seeing here is that the stock overall, the long-term trend still remains negative for the stock. The short-term trend, we are seeing some bounce back. So if you look at it on 20th September also, it had made a low of 16, almost 16, and today was a low of 14.3. So what it needs to definitely do is close. First of all, the closing needs to be above 16 odd levels, but on the upside, it's likely to run into resistance somewhere around 2022. So that's the upper range. But again, those levels would be sold into, and above that, 25 is a crucial zone of resistance. So we could see that the stock trading in a range of 15 to 25, as long as we don't see a breach below today's low, I think the stock could be forming a bottom. And talking about RBL Bank, I would say RBL Bank, what we are seeing is that RBL Bank overall, we are seeing that it is negative on the long-term charts. However, what we are seeing on the daily charts is that there is some sort of bullish divergence on the daily charts. And because the 28th August low, which it had made of 286, that was taken out, and today we had a low of 257. So it has bounced back from there. And also what we are seeing is that over the last almost 20 sessions, the delivery quantities also increased. So ideally, this stock needs to close above the 300 mark and sustain above that level. Then it has a potential to rally towards 325, 350 levels. So today's low is something which is going to be very important and crucial for RBL Bank.
Let's see, shown some bounce back. Let's wait and watch if that indeed lasts. But Kunj Bansal of Sarthi Group joins us right now on the show to talk about his thoughts on what's happening. Kunj, one can understand the trouble pockets going through turmoil, and I think that's been now happening for a while now. But we are now starting to see a bit of a dichotomy in the sense that good assets with slightly troubled issues are getting punished very, very severely. The SL Group is a case in point. The managements of RBL, IndiaNivesh Bank have come and clarified. Somehow the market is just not buying those conversations. What's happening here? You reckon that these stocks will keep on getting shunned?
Yeah, so the market has really become a difficult one. Very clearly, we are not in a phase of the market which is one-way bullish market, and wherein besides the good quality, the next level of quality, whatever we call it tier 2, we call it slightly doubtful, we call it not as strong business models, or we call it not as strong owners in terms of corporate governance ethics. So all these things tend to get neglected when we have a secular bullish market. We of course are clearly not in this kind of the market, and with all the activities going on around in the industry, various regulatory agencies coming out heavily on any kind of wrongdoers, whether proven or not, and market, because as I said, it's not in a one-way bullish phase of the market, does tend to take a very cautious view of such incidents. Very clear, you rightly use the word dichotomy has emerged between the businesses, the companies, the managements, wherein either the market doesn't expect any questions or haven't come any questions till now. If in future comes, maybe some more names can always get added to the existing list. But pending that, wherever any questions, any news flow, any rumor, unfortunately rumors also included, whether rightly or not, only time will tell if the wrong things get proved. But market is clearly avoiding that, clearly shunning that. Nobody is wanting to touch the hot potatoes. In fact, everybody wants to probably looks like get away from there, and which is where we are seeing this kind of diversion in the market. Good are continuing to get better and moving towards best, and the bad are moving towards worse and passing through the worst phase and maybe moving through the worst, towards the worst. So that is what is something which seems to be happening in the market. It's a part and parcel of the market life. We have to live with it.
Kunj, aside from that, anything, while obviously you don't catch a falling knife, but if at all something that looks probably was a bit more expensive some time ago has become that much more attractive now, and therefore the risk reward has turned favorable, what would you do? Which would those pockets be?
Yeah, so since the large part of fall has come in the BFSI, which is obvious, it's a high beta sector, and that is where the news flow also is related to the real estate asset quality. So along with the overall market fall, some of the good names which have fallen marginally or maybe more than marginally also, but certainly are not at the close to the peaks. So there's this mid-cap pick bank, South Indian Regional Private Sector Bank, City Union Bank. So that is one of the very good quality banks, has very quite well managed in terms of asset quality if we look at it consistently over the last 16-17 quarters or more also. So that has shown some correction, so that becomes a good buy. Within the large caps, staying with BFSI, ICICI Bank has shown some correction. It is not having as much of a problem now after having come out of the problems about a year ago. So these are some of the picks that become a good buy for the medium term. So they may or may not perform in the short term. That depends on the market. That depends on the September quarter numbers, which we will have very soon. But for the medium term, at any corrections, they become a good buy.
Auto and auto anchors are having a very different day today. Look at Bosch. The stock should come up on your screen, and just a sudden crackdown. It's down about 9% or 8.5%. 12,933. This would be 52-week lows for sure, maybe multi-year lows for Bosch. And this is a quality name which has just come off quite rapidly today. So watch out for this one. And the reason why I say that autos and autos is a very indifferent day today, because Escorts, for example, is up about 5%. I reckon an impact of the numbers that have come out. But just quite astounding the way some of the auto and auto ancillary stocks are behaving in the session today. Kunj, we refer to quality getting bought into. I mean, you can't fault the quality of Bosch, right? And autos, I thought, were trying to mend their way. There are some sharp gashes that are happening. Would you attribute this to maybe technical factors like a fund or a large investor selling out, and therefore that could be happening, or would that be business reasons for the same?
So one of the parameters of quality is also the business growth. Any financial business model will start from, first of all, top line growth ideally should be coming into the company, and then it has to move on to other parameters like it converting into bottom line growth in line with that well managed working capital, resulting into net positive cash flows, which will result into the higher return ratios, ROC, ROE. So the top line growth, especially in a market like India, wherein specifically global investors come for growth, they don't come for value. So growth is an integral part of the quality. So that is something that in the whole auto pack, and as a result in the auto ancillary pack has been missing. And this has been seen in the numbers today also, which have come. The September monthly numbers for Bajaj Auto and Maruti have come down negative more than 20%. Of course, for Maruti month on month there is a good growth. As against that, Escort, as you rightly pointed out, has shown a 2% growth. So that is something that has been missing. But yes, these quality businesses, very right, like Bosch, do become something for a contra investors to look at. But to add to that, such a sharp fall could clearly be associated, which I don't have information to right now, to some fund selling or to some bulk selling that might have happened. The stock, although the reasonably decent market cap, but it's a relatively illiquid stock, and that could certainly be the reason for this sharp fall.
Okay. Jay Bala of cashthechaos.com is also joining us on the phone line. Jay, thanks very much for taking out the time. It looks like the indices, both the Nifty as well as the Bank Nifty, are on their way to retracing those big gains that we saw early last week. Do you see, telltale signs of further weakness on the index?
Yeah, good evening, Devna. Yeah, that's the case. I know I had posted on Sunday night, a blog post, having a closer look at the markets. And in fact, today's fall on the banking index the Nifty Bank, it's sending a very important message. The possibility of this being a start of a new uptrend is very, very low. It has overlapped into the price territory of the level 28,277, and that signals that the move of the September low is only a correction and not a start of a new trend.
Okay, let's talk about how one can optimize on your view. Then, what kind of strategy can one adopt? Whether it be taking a play on the options or just the futures itself, on both Nifty and Bank Nifty.
Yeah, that's a very good question, Devina. Because at this juncture, it's not an easy setup at all, and the markets are getting very volatile, and naked short or future shorts are going to be very, having wide stop losses. So playing this market through options makes tremendous amount of sense. And on the Nifty, the Nifty needs to drop a sprint, 11141. So once that's done, that's the equivalent level I spoke about on the banking index. So once that happens, that will also confirm that the bounce from 10,637 was only a correction. So the best thing to do is you have a confirmation on the market that this is most probably only a correction. So what you do is wait for a bounce to come back. The inevitable bounce will come once the Nifty also prints the equivalent level of on the banking index. So you wait for the bounce to come through and then sell off. You saw a high of about 11,694.95 on the Nifty, and we'll come. We'll probably come as close as 11,141. You use a Fibonacci retracement of that, and then you sell the market at those levels. So that's the kind of patience you need to have to exploit this market's volatile movements.
Okay. Jeb, appreciate you taking the time out and joining us. Thanks much for being with us today on BloombergQuint. Really appreciate your time. Well, one stock that I want to get Amar Singh on, because I'm guessing Kunj wouldn't have a view out here, or maybe he does. I'll get to him as well. But Indiabulls Housing Finance is up about 6% in the session today. Remember, the management spoke to us early in the morning as well. You can log on to our website and try and read that conversation. But Amar Singh, would you go out and trade or touch Indiabulls Housing Finance from a trade perspective?
Actually, I would say that this is one stock we definitely avoid, because there's a lot of news flows that happens, and sometimes the technicals really wouldn't work. So, however, from a long-term perspective, if you look at the charts and even the intermediate-term trend, that continues to be extremely negative for the stock. So that's one thing. The second is that the last 2-3 trading sessions, the delivery quantity has increased significantly. So that means a lot of buying has happened. There has been selling, but a lot of people who've come in and they bought the stock. So that's one. So it could show that maybe the stock could find some support towards the lows of today. But I would personally, or I would not advise trading this stock.
All right. Obviously this is not new, but the news was out, I think, a few hours ago with regards to, the Delhi High Court admitting Indiabulls' plea of perjury against Prashant Bhushan. But this reaction probably not to that, but just silver lining that's there for Indiabulls Housing, because the news came out a few hours ago. But the stock is now from being down about 10% of the intraday low, is up about 5.5%. So it's a big 15% intraday swing on the counter, and it's moving up pretty quick. What's the situation with Indiabulls Ventures and Indiabulls Real Estate? Those are the other two companies that you should watch out for. That's still locked down on lower circuit for Indiabulls Ventures. For Indiabulls Real Estate, still the lower circuit doesn't open yet. So it's just Indiabulls Housing that we're talking about, where there is some amount of interest that has crept back into the counter, about 7.5%. But let's also take a look at what dealing rooms are recommending this afternoon. Darshan Mehta is here with his channel checks. Good afternoon, Darshan.
Good afternoon, Devina. And concerns still remain, at least on the financial institution side. One of the stocks that's been spoken about is IndiaNivesh Bank. Is down 5%, has recovered significantly from the day's low, had a freak trade, went down all the way below the 1200 level, but nevertheless some of the FIIs have been active sellers on the counter. The other counter in which dealers indicate that there is selling, and that is SBI. Slowly and steadily was down 10% at one point of time, has recovered from the day's low, but the asset quality concerns remain, has significant amount of of exposure. It has close to 8,000 crores of exposure to the Indiabulls group only. So that is another concern that is there. And the last stock that dealers are talking about, and that is the Piramal Enterprises, has managed to move to the day's high, but dealers indicate that some of the HNIs are actively squaring positions at higher levels.
Well, interesting that Piramal too is seeing that rub of green. Thanks, Darshan, for putting that into perspective. So those are some names that you could monitor in the session today. Escorts is up about 5%. Kunj, any silver linings in the auto sales numbers that have come out in the month? I mean, I could probably find one or two, but it wasn't quite indicative of what the space could do. However, the monthly registration numbers, I must add, have shown an uptick.
Yeah, so obviously, as the company's number reflect the primary sales for Maruti and Bajaj have clearly shown a degrowth of 20%. Though for Escorts it's a surprisingly plus 2% growth. I think for one to take a reasonably more, or not reasonably, but a more decisive call or a more confirmed call, one may want to wait for another 1 or 2 months, which will include a lot of festival season getting included, which will include the benefit of lower interest rates being passed, which will by then the impact of the farming community of the monsoon on their crop will be known. So all these factors will be known. The wealth effect pushed in by the government by way of tax cuts into the corporates would also, what kind of multiplier effect it has will be known. So that is where one will have to be able to take a call with more certainty. But let's keep in mind that by then market would have reacted. So if at all a recovery starts being seen, a smart money is something which is able to see all these things much in advance of when actual official numbers get declared. So for a contra player, if somebody has a medium term view, doesn't mind seeing another 5-10% or that kind of downside in the short term with the negative news flow, the medium term and the long term prospects of the whole automobile sector, I don't think have gone anywhere. The threat of electrical vehicle, which at one point of time was seemingly looking very large, has subsided for now. So we should see some growth coming back, but as of now it's more of a hope and less of actual numbers. So as I said, for the contra players, anybody looking at a good valuation with a medium term doesn't mind short term some more risk is a good play. Those who want a little bit of more certainty don't mind getting into at higher levels from the current levels. They might want to wait and watch for some more time. The sector can actually be better played by auto ancillaries instead of OEM directly. So that is where one gets some more diversification in terms of risk of the business. The growth can come from multiple OEM clients. The growth can come from increasing size of the business from each OEM, and the growth can come from multiple geographies instead of depending on the few geographies as in case of OEMs. So the sector can better be played through the auto ancillaries.
Okay. Sector better be played from, by playing on the auto ancillaries instead of the OEMs, according to Kunj. We're just 10 minutes shy. I just want to quickly look at IndiaNivesh before I go across to Amar Singh and get his, closing strategy in today's session. So it's actually come off from the highs of the day. So we crossed 17. Come down from there, but nonetheless, these are days where you're seeing huge swings taking place. And remember, this again leaves you, thinking whether or not there is a further downside left to this downtick that we've been seeing in the last few days or no, because all the conversations that we've had with most market participants, even in the last time around when we saw the market start to dip, the comfort zone for IndiaNivesh would have been somewhere closer to 21, 22, which would probably lead you to cap the downside. But this range between 16 to 21, 22 on IndiaNivesh is pretty open now, which leads you to believe that there could be some further downside that would come about on the indices and the market as a whole. But getting into those closing strategies then, Amar Singh, what would your buy today, sell tomorrow idea be? Or sell today, buy tomorrow idea?
Yeah, I would say that Hdfc Bank, in spite of the market witnessing a sell-off, this stock is up, and technically, if you look at the stock, I would say on various time frames, the stock continues to be positive. So this is one stock one can look at buying. On the upside, it would meet with some resistance first around 1280-85 levels. If that is taken out, then we could see levels of 1320 levels. On the downside, it has got good support coming at around 1200 to 1210 levels. So this is one stock one can look at buying.
Would you, very quickly, would you look at the tractor players at all, Amar? Mahindra and Mahindra is trading, I reckon, at the highest point of the day. Escorts 2 is up about 5%.
Yeah, looking at Escorts, what we see here is technically it's very strong on the short term and the intermediate term trend. Long term, it has got some resistance coming around 620, 625. Because if it sustains above 620, 625, then we could see some real sharp spurt in Escort towards 660, 670 levels.
Stocks which are, well, not done too badly include a Mass Financial at 712, that is doing okay for itself. Siemens at 1540 is doing okay for itself, trading at close to 52-week high. So there are these, well, couple of names which seem to be doing okay. But aside of that, there is, even though the index is down only 1%, there's a lot of pain in select names which aren't quite inspiring confidence. You know, Kunj, the fall in State Bank of India, right? Every large money manager that I spoke to, when they cite examples of why the market is shunning some of these banks, talks about how SBI is finding no takers at 255. The stock, I think, was at 300, 310 when the first bout of government action came in. At 255, there are consistent sellers. I know we've spoken about banks at length already and the reasons why the market would not be liking. But my question to you is, would SBI, the stock price damage that we've seen in India's largest bank, taking care of asset quality issues as we see them, or is that the market is fearing more? The other statistic that is very interesting, Kunj, today is that Bajaj Finance market cap has overtaken State Bank of India's market cap.
So I would like to answer this question of yours by so let's look at the long-term performance of the State Bank of India, and we can take our own definition of long-term. If somebody is comfortable in these days, 1 year, 2 year is considered long-term, though it is not. So even if we take 4 years, 5 years, which is maybe medium-term or a slightly long-term, or even longer, what we would notice, probably you can draw graphics on your screen and show it to the viewers, is that even in such a longer span of time, for such a patient investor, the public sector banking space, more specifically the leader of the whole banking space at one point of time, not only public sector but even private sector. You just told me this statistics which I had not noticed, that now Bajaj Finance has overtaken it in market cap. But coming back from such a leader, such a longer term also, there is no outperformance, no performance. In fact, its private sector counterparts, some of its smaller counterparts, some of the NBFCs have far outperformed it. And that gives us the answer to the question that at 255, does it again become a buy? Maybe it becomes a buy for a trader. It certainly can go back with the rise in the market, with some positive news flows coming back to 270, 80, maybe to 300. It was at 300, even further higher after the tax cut announcements. So these kind of short-term trading movements can always keep coming in, and that from a trader's point of view, maybe it becomes a buy. But as I said, from a patient investor who doesn't want, and which is what we rightly advise, doesn't want to keep checking market, his holdings or his portfolio movement on a monthly basis or on a 6 monthly basis, the bank doesn't give any return. So such a investor, in my view, cannot be advised to buy even at this price. For a trader, it's a trader's delight. Yes, they should buy at this price. I think it's a quite favored on the risk, on the return side, on the risk return parameter for a trader.
Okay, just keep in mind, I mean, just look at, at the point that we were making, Bajaj Finance's market cap is now higher than or equal to State Bank of India. Look at the 5-year dichotomy in the performance between both of these names, and just proves that buying large is not enough. People are talking about buying large names, polarization, and therefore if you buy a big company, you're safe. You need to buy the right large company as well, and both from the same space, which is I make the point. I'm not choosing different sectors, both from the same space, financials.
I'm not able to see that number for my benefit. Tell me also the divergence that
okay, I'll just quickly tell you the divergence. SBI 5-year is 5% or 5.6%. Bajaj Finance is 1,340%. This is not CAGR, of course, absolute numbers, but that's just a whopping difference between the two. Anyways, just before I start wrapping up the markets, Amar Singh, quick thoughts on Bajaj Finance as a trade, very quickly, 30 seconds. Okay, I think we just lost Amar, but I mean, Devina, just startling the way some of these well-performing NBFCs have done.
Yeah, I mean, and they just keep getting more and more expensive. You think you'll wait for, some time for these prices to come off, get them slightly cheaper, but in that wait, they become that much more expensive. So, and as Neeraj highlighted, it's about, not the size, but the kind of company that you buy.
But yes, let's start wrapping up the markets. About 1% lower for the 3 key benchmark indices, and maybe not too bad considering what we were seeing just about an hour and a half ago, wherein we were very volatile and the bank Nifty was down close to 750 points. So like yesterday for the Nifty, at least there has been a bit of a recovery. Today the bank Nifty too has recovered, but ending in the red. The mid caps and the small caps, I doubt, would have shown as much of a recovery. So yeah, these indices tend to, once they've fallen, they tend to bounce back slightly slowly. Very nature of the index really, and higher components, so on and so forth. But down about a couple of percentage points as well. So more of a cut in these indices. Let's talk about the individual names, at least on the large cap arena first. BPCL, the top gainer, and it stayed that way throughout the trading day. Mahindra & Mahindra has done reasonably well in the session today. HDFC Bank 2% higher, so quite a strong move in the last. In fact, that's been one principal reason why the market has moved up as well in the last half an hour. Maruti about 1% higher. It's not been a bad day for autos because iShares too is up about 0.5%, and Titan, we spoke to the management yesterday at 2, and they were exhibiting confidence of about 0.7%. What's not doing well? Z, 10% lower. IndiaNivesh Bank, you would have thought that this could have ended the day with the biggest cut, but it's recovered a little bit. SBI was down about 10%, now down about 5%. Bharti, let's go of some of the gains yesterday. Cipla continues to languish, fresh 52-week lows. And down there, the commodity names, Ultratech, Coal India, JSW, all have looked weak. IT2 hasn't supported. The broader markets, Devina, again, weak, but some of the names have shown a bit of a pullback today.
Yeah, they have, but that's not worked too much with regards to the index move. So while the Nifty 50 has recovered, you've got the broader market space still reeling under pressure. But I'll quickly run you through some names, maybe some stock-specific news activity, which has led to some of these names moving higher. NMDC, for one, finally shutting shop at the highest point of the day, with some clarity coming about with regards to the Ramalai mines. Stocks up about 10%. Container Corp is the other one that's done well by the end of the trading session. The stocks ending about 6.5% higher. And then your divestment candidates. So aside from the ones that we already spoke about, which is BPCL, Concor, and Shipping Corporation of India, these are the two names that have been very active over the last few days on the back of the divestment news. Escorts also, with regards to the auto sales numbers, and that's showing a positive reflection in the stock price performance. Very volatile through the day, as you can see, a lot of jagged edges, but the stock finally shutting shop 5% higher. Balram Chini, Avenue Supermarts, and finally Indiabulls Housing. You wouldn't have anticipated a close in the green. I don't know whether it actually closed in the green. Yes, it did finally close in the green. 10% higher. So you can just see the kind of intraday volatility the stock has seen after yesterday's 35% dip. Morning was down about 10-11%, and then now it's closed in the positive by 10%. So a 20% intraday swing on Indiabulls Housing. Not so lucky for the rest of the India Group stocks. So Indiabulls Real Estate, Indiabulls Ventures, these two stocks still on lower circuit, so not much of a major move on any of these names. DLF continues to look weak. And while we've seen Z Entertainment sitting with cuts of about 10% by the end of trade, the other SL Group stocks like Dish TV, Z Learn, they too have seen major cracks in today's session. So Dish TV 10% lower, tried to recoup those losses but didn't succeed. Z Learn another 5% given up. Vodafone Idea, RBL Bank also decent recovery from the lows of the day. The stock was down 20%, had its worst intraday fall, and finally by the end of trade is closed with cuts of about 7.5%. And Apollo Tyres, Godrej Properties, not so lucky in trade today. Both of these stocks down under by about 6.5%. But in terms of the overall mood of the market, improved a little bit towards the end of the trading session, but still closing with some decent enough cuts of more than 1%.
Yes, cuts of more than 1%, and 2 days in a row now. The bank Nifties look a really wobbly one. The turnover, I'm really interested in that because yesterday too, the cash market turnover was fairly high. In today's session, 46,000 crores. The F&O turnover at 18 lakh crores as well. this is quite remarkable what's happening.
Yeah, so like I said, this would be a function of the fact that, you know, you miss out tomorrow's trade, which would have been the day prior to the Nifty options expiry. So that would have, you know, fallen on today. But the cash market turnover, you know, the average is starting to move higher in a big way over the last 10 trading sessions at least. It would have nudged closer to about 38, 39,000, even 40,000 for that matter.
And FIs continue to sell, even though they are not large numbers. And this would probably indicate that there is some bit of HNI portfolio money now coming out, and not just institutional money, because the FI and DI number yesterday, the reported numbers was 400 crores, 500 crores on a day when the volumes were 39,000 crores. Very interested in seeing what the numbers look like today. The contributors, just very quickly, and let's just see what's happening there as well. Again, not all banks really. ICICI Bank is an SBI, but Infosys and Reliance participate on the losing side as well. And in fact, the HDFC Twins on the gaining side, Devi.
Yeah, you know, they reversed their position from yesterday. They were the top losers out there in yesterday's session, but today adding on to those gains. Amar Singh is still here with us. Amar, a quick closing thought from you. And what should one watch out for? Tomorrow the holiday, so when we come back on Thursday.
Yeah, I would say that Nifty needs to sustain above 11,500, 550 mark. On the downside, 11,200, 250, that's a crucial support zone. So it's more of a range play for the last few trading sessions. But as long as 11,200 is not reached, I would say there is a positive bias.
All right, we'll let you go on that note, Amar. Thank you very much for joining us. Appreciate you taking out the time. Kunj, final thoughts from you?
Yeah, so for me to predict the market in the shorter term is always a challenge. What I am looking forward to seeing is the September quarter numbers, which we will start having in about a week to 10 days from now. So that, along with the supportive government announcements that will keep coming in, privatization is a news that has been flowing through starting late last night from today morning onwards. So whether that moves in the right direction or it again fizzles out like all the efforts in the past. So these are some of the trends that I'll keep looking for. The clear trend of a significant dichotomy in the market, quality continuing to be demanded and as a result becoming more and more expensive, and the non-quality being pushed aside is another trend that will continue in the market.
Okay. Kunj, thanks very much. Appreciate your time.
Thank you.
And with that, you know, a very exciting note. I would say exciting because, you know, very active session on Countdown. Thanks very much for watching. From Neeraj, myself, and the entire team that's put the show together.